Hello and welcome to today's webcast with Pagero Group, where CEO Bengt Nilsson will present the second quarter of 2023. After the presentation, there will be a Q&A, so if you have any questions to Bengt, you can send them in via the form to the right. And with that said, I hand over the word to you, Bengt.
Thank you very much, Ludwig. Welcome everybody to the presentation of our Q2 2023. We are having now the seventh quarter since we were listed on Stockholm Stock Exchange, and we have been pursuing the plan we laid out in those days, and I would say, as in general, we are following that plan, and we'll present your numbers to you now. If we look at the, let's see here if we can change the screen here. Presentation, just a second here. So now it works. Sorry guys. To start a little bit with recapitulating, what are we actually doing? We are building the world's largest business network, open business network for digital transformation, digital traffic between what we call business parties, that is buyers and sellers all over the world that want to connect. As you all know, they all have, or we all have, that run businesses, some sort of business systems or ERP system, and we are sort of obliged to see that we get the information back and forth between buyers and sellers or contractors in the communication between companies to make the work really efficient. So in a way, the background is efficiency. The background is to see that things go smooth and that the supply chain works really fine. What has happened now is that the government has come into the picture. That is the VAT regulations all over the world. And these things are sort of making it a need for companies to really oblige with the legislation. Otherwise, they cannot send invoices. In some ways, some parts, they also need to do this for orders. When it comes to invoices and the legislation, that has sort of started to, I wouldn't say explode, but that is coming now country by country all over the world, and that puts up demand. So we are not really in the business of sort of promoting what we're doing. We are sort of having something that people really need to have, and they have to invest in. So the market by market in the world is now adopting this. And I would say that the large markets are now on their toes to do that also. We see France coming within a year, we see Germany following, we see Spain coming, etc., and this will grow the demand enormously going forward. So automation is the key, but legislation is the driver. So that's what's going on. If we look at the company today, we are all over the globe. We have our 9 regions. We are operating, I would say, all over the place, except in Antarctica, I would say. So we have sales offices and delivery offices and R&D offices all over the planet, all the way from Mexico City to Melbourne. We have people developing the products in Mexico, in Santiago, in Chile, we have in Düsseldorf, we have in Sweden, in Gothenburg, in Stockholm, and we have Sri Lanka, or Colombo in Sri Lanka, in the Asian Pacific region. All these people, over 180 people today, are continuously developing the product to serve the world with the system that can supply all these things for them in a very prudent and 24/7 service. 800 people plus, 30 countries plus, and 85,000 direct connected customers to the platform. If we look at the development of the company, we had chosen to really develop the organization in parallel with developing the product and continuously doing so. So why do we have to continuously develop a product? The thing is that we are adding things to the product, we're adding services to the product, we are adding also new demands. The regulations are such that they change all the times. We have had in Latin America over 80 changes in regulations over the year that we have adopted to the platform that really made it easy for our customers to just keep on operating. With a simple connection to the Pagero network, they can use their business or their business system as they've always done, and they don't have to think about it. And that is what we are doing. Growth, yes, that is the team. We have been focusing on growth for the last 7 quarters, even past before that. And we see that now in the numbers, how it's coming. We have gone from, if we compare the previous same period with this period, first half of 2023, we have grown with 32% in net sales, organic growth. We had in the past 20% if you compare it with the period, and this is a good achievement by the team and by the organization. The ARR, that is the recurrent revenue, is over 33%, gone from 19%. And when it comes to recurring revenue share, that is 87%. That one can go up and down a little bit depending on how much services we are selling when it comes to implementation. A thing to look at is that if that one goes down a little bit, that means we are doing more services, which means that we are doing more implementations. And if we do more implementation over time, there will be more ARR, there will be more net sales growth because transaction is coming from a lot of our clients. Gross margin, 88%. Customer churn, very low. This is the net value, 1.7%, gone down from 2.2%. And I would say that that is an industry number that is very good. And then EBITDA margin now has gone from 21.9 minus to minus 14.1. And we are investing in what we call investment markets. And investment market for us are huge markets with huge potential. That is markets like France, there's markets like US, the Arabian Gulf. So those are investment markets. And of course, everybody realizes that the potential is enormous going forward. Highlights. We can go through the numbers if you want me to do that. And that's why you are here, so I'll do it. It's increased by 32%. It was 46% in the past, but then we had an acquisition. So now it's totally organic growth. Adjusted for currencies is 27%. And we believe that this will continue going further in the rest of the year. We really feel that we are on a drive to do an excellent year of 2023, and we will position ourselves as one of the leading vendors when it comes to the things we are doing in the world. Recurring revenue amount to 166 million, going up from 127 million, and that is a very good increase of 31%. And it's a result of the strong growth of both transactions and licenses. We could say that Pagero network is a network where we add in customers and they start transaction, but everybody that is sort of doing something in the network sees they can do more. And the drive is we have a natural growth in the network by adding more and more customers to it. I'll come back to that a little bit later. Operating loss was 30.7, down from 48.3, and adjusted EBITDA 30.7 from 31.4. And you should be aware about it that we are investing continuously in markets to be very well positioned when legislations hit sort of the market. And we are doing something pre-hand. We are doing things in the platform. We are doing things on the organization to tune it. But of course, we are slowly but surely getting towards a situation where the profit is coming all over the group, not only in those mature markets where we operate in with a great revenue stream and also great growth, also, I would say, but also with a good profit. Cash flow from operation activities amounted to 12.9, sort of the same for same period previous year, and earnings per share improved a little bit to 0.58 minus from 0.69. If we look at deals that we're doing, we did a very big deal and everybody has focused on that one, or 4.2 million. We do a lot of deals in high volumes today, but some are also companies buying from us with maybe 10% of what this deal is, but over time they are buying more as it revolves. It depends a little bit of the buying behavior of the company that wants to join the network. And some of them want to do it in a sort of a big one, but a lot of them are mostly doing piece by piece, country by country, adding new lands, so new countries to the platform, so to speak, or to their use of the platform, I would say. ARR, here you look at it, you see how it's been growing, 33% between Q2 22 to Q2 23. Behind this, is a growth of new sales of over 120% if you same period. And this is really showing how the organization is sort of fueling and doing a better job. Our brand is getting more known. Our products are getting more good reputation in the market. And we are sort of adding those users to the network day by day. And we are working continuously to see that this adding of users can be easier and easier in the platform. And this is the way we will grow forward. NRR amounts to 117%. We started to measure that now, and we will do that and follow that from now on. That's net retention rate. And it is a good number that we are proud about. And the churn, which we're also very proud about, is as low as 1.7%. The quarter was strong, organic growth again, 32% and 188.6 million SEK. And we see now that we believe strongly that this will continue, as I said before, throughout the year. And we will have sort of this, the curve going towards the goal to be on 1.5 million in ARR when we come into the year of 2025, or end of year 2025, to be very specific. Growth, profitability. We show now that 82% of our total net sales, that was in the past 89%. The investment markets is now taking a bigger share, as you see. They're now taking 18% of total net sales, which is important for our profitability. And you see also in the small little circle here how it's been developing over the years or over the quarters. And we now see that the rule of 40, which is a combination of net sales growth and EBITDA margin, is now up to 53% for established markets. The good thing with that is it shows that net sales growth is pretty good in established market, which means that companies operating in these markets are embracing the platform, they're doing more services, they're adding more companies they have, or they're adding more countries that they are operating in. And EBITDA margin is also very good. If we look at the investment markets, they are now taking 18% of our total net sales, coming up from 11%. And the growth is good, 121% net sales growth, up from 55%. So it's sort of improving. And EBITDA margin has gone from minus 426 to minus 195. And as a total, when we look at rule of 40, it's minus 74, up from minus 371. You can think whatever you want about this rule of 40 or how we measure it, but it is a sign that we are heading towards profitability, and we are heading, but still with a very good growth in the total group. And I think those things are very important. It's not only about growth, it's not about growth with profitable growth, and it's about getting this sort of all over the place, all over where we're operating. But as you all understand, there are 200-ish countries in the world. They are in different phases. There are different sort of situations, different complexity. But we are sort of adding that complexity to our platform and seeing that a customer operating somewhere in the world can really just connect to the platform, and then they can operate and they can invoice, they can take orders, they can have clients all over the world, and they can be that in compliance with local regulations. And if they're complying with local regulations, the likeliness of them getting paid is much higher if they are not, so to speak. If we look at the turn that we talk about, we are sort of growing investment markets, as you see here, 55% in Q2 22, was Q1 23 is 124, Q2 23 121% growth, and you see also how the EBITDA margin is improving over time. This is of course leading to that this group rule of 40 is improving. We had a slight dip here in Q2 23. But that will happen all over the time because there are variances. We are deciding sometimes to do pre-investments, to do things when it comes to either development or organization. We need to do that. We need to be compliant, and we do that all the time. So it will vary a little bit, but the direction is pretty clear. We're going towards to be, we're going to have good numbers straight over. So I'm not going to go into that too much. Profitability, towards profitability goal of 20% by 2025. We will come back to that in coming quarters. We are investing, and I think that investing today has been sort of a word that maybe is not that in, if we call it like that. People want to see that you focus on cost reduction and so on, but we are not in that game. We are in the game of keeping cost at the balanced situation. We are in the game of taking the advantages of a situation where legislation is playing the cards in, putting the cards in right in our deck, and we are sort of in the game of taking these markets that we are operating in. And we are also saying that we're going to try to be one of the leading global vendors. What we need to do then, we need to invest in technology. This is a technology race. We need to invest in organization. We need to invest in marketing. We need to build brand and recognition. And we need to be a global player. Not just say that we are a global player, we need to be a global player. We are doing that. We are proving that the business model is working. We are proving that in mature markets, we can do good results. And when we get these investment markets up and running, we will have a very profitable group operating globally with something that has the chance to be a very long, successful venture when it comes to this type of industry that we are operating in. The Pagero stuff is needed. It's not something you have to sell. It's needed. Someone wants it. Growing customer base and usage. We have signed, as we said again, a large deal in the last quarter. We are signing more and more of these deals. That is large corporations that are embracing the message we have, the thing we are saying, compliance, automation, in that order. They want to have one platform, one company to talk to, and we are adding the services to it that they want to sort of adhere to. 32% of our sales in this particular quarter came from existing customer base. If we sort out the large deals we did, then it's over 60% that are repeat sales from existing customer. And if we look at that, then we all understand that if you have started to use Pagero Network in a couple of countries, and if you're going to add another market where you're operating, legislation is coming, it's fairly natural for you to just use your existing connection to the platform and just add another country, add another jurisdiction, and see that things work in a very efficient way. We are there, we are competing, we have competitors, but I would say from a tech point of view, from an efficiency point of view, we're definitely one of the leading stars in this business. We have signed a lot of other significant deals in this quarter and half year, I would say. We are in shipping, in cosmetics, in healthcare, and automotive industry, which tells you that this product, this service that we are offering the market is generic. It's not specifically automotive, not specifically healthcare. Everybody needs it. Everybody can use it. It's generic. But of course, we have people that understand certain industries better. And of course, then we can talk to people in healthcare, talk to people in automotive or in shipping or cosmetics or whatever. And that makes, of course, the whole thing much easier. We are going to launch now in Q3. This is a pre-launch, you could say, I'm telling you, functionality and features in our new network release. And that is expected to catalyze customer acquisitions and transaction volume growth during 2024. That means that it will be much easier for customer to connect to the platform, identify business partners in the platform, invite them, see that they get up and transacting, communicating with each other all over the planet. And that will fuel the growth of customer base in Pagero Network. And that's extremely important for the future, that we really get the growth and adoption of this way of working from a global context. Thank you very much for listening, and I will be happy to answer some questions.
Thank you so much for the presentation, Bengt. There's been a couple of questions, so I think we should start right away. You increased your turnover by 32.2% compared to the same period last year. What have been the contributing factors behind it?
I think there are three contributing factors. One, of course, the product. We are improving it. We are getting better and better every day, I would say. Number two is in combination with the product, I would say the reach of the product, the countries we are sort of being compliant in countries that we are having the service. I would say two, the organization. We are getting the organization in a very good way when it comes to sales and marketing all over the planet. And I would also say that the partner program that we have launched, which means that we work with partners of the world, people doing other applications that needs a network. They realize that working with Pagero is a good offer for them, as a good way for their customers to get the service, as a good way for them also to sort of have an extra benefit when they sell their products.
Thank you. The projects under implementation, are these particularly included in the order book, or is there any rule of thumb how much larger subscription transaction revenue should be in relation to the service income from implementation?
That's a very complex question. I can answer it like this. I can say that we have customers, large customers, that sign connection to the platform but don't buy any transactions immediately. They don't buy that in bulk, as we say. Normally, some people do that, but they chose not to do so. So they buy revolving as they get up and running, so to speak. And we have quite a few customers like that will add and fuel the growth going forward, that are in implementation. Yes.
Thank you. You mentioned becoming one of the leaders, but how many actors in the industry do you believe there is room for in the long term?
I come from the ERP space, and I predicted in the 90s that most of my competitors would be gone. I can tell you today that I was wrong. They're all there still. So it's a hard group to get rid of. So I could say stickiness in the business is very high, which means that most of these will probably still be there, but they will be in different shapes and forms. They will either go to a small local market, or they will sort of focus on an industry or something like that. I think that the number of players that can do the global picture, to really have a global service for most of the countries in the world, that will be just a few.
Yes. Seems to have stepwise big improvements in EBITDA margins in investment markets, such in Q1. Are there any specific reasons for this? And if so, are there any such events on the horizon?
The one is that legislation has come in some of the markets that we invested in prematurely. I mean, before they had even legislation, they have come into swing, so to speak. Another thing is that the organization in the investment market has come to the size, so we become sort of a real force in the markets where we are operating. I would say that's a combination of you can call it legislation, you can call it luck if you want to, or you can call it and of course organization and service in the market.
Thank you. Could you talk about NRR and how it's trending? Can you also elaborate on the lower churn and the general stickiness switching cost of your products?
I mean, if we have a service that is fairly, if you compare it what people have had before, it's very cost efficient. So it's sort of, the cost is not horrendous, it's not high. Companies have these costs already in some way or another. So they are replacing one cost for another, in most of the cases to a lower cost as a total. So that is one thing. And if you have that, the stickiness is fairly high. You integrate your systems with it, you set up your routines towards it, you sort of maybe start using the data in an efficient way and setting up your BI tools so you can connect to the data. All these things comes together, and you don't want to change that. So I would say the stickiness in this business is very high.
Thank you.
That's
Could you talk about the rollout of the Pagero network in Latin America?
Yeah, Pagero Network, what we are doing in Latin America, as you know, we bought GoSocket, which is sort of the last mile. That is the connection between companies and the governments in Latin America. We have 15 countries now that are connected. We do enormous amounts of transaction because that's clearing transaction towards government, both B2C and B2B. And we are integrating now country by country. So if you're connected to Pagero network or Pagero online, as we call the specific part that is sort of within, which is only the one we have sort of designed here in Sweden from the beginning. That part is now connecting by entity or country by country in Latin America. So we have Chile up and running, we have Peru up and running, and we will add 4 or 5 other countries during this year from that platform. You can always directly connect to the platform we have in Latin America, but we prefer that people do it or companies do it through Pagero Online. So we look forward to this. We think this is unlocking, as we call it, the Latin American market for our customers. And we believe that the service level we can perform in this case will be enormously much better than if people choose network by network, country by country. So they can have one vendor in the world, and we will service Latin America for the most.
Thank you. Are there any specific large investment market that is showing particularly strong growth and where you might increase your organization going forward?
There is one, of course, that we all know. 52% of all investments in the world are done in North America, IT investments. That's an enormous market. We are 30 people in North America today. We are doing good growth. We are operating there with both our partners and with our direct sales organization. 3 years ago, we were not that many in North America. We were sort of trying to find our way. What we see today is that the North American companies that have export in other parts of the world, they really like the Pagero concept, so to speak. And you can just think about it. I mean, we can service them in Latin America. We have the Latin America, which is sort of some called the backyard of US. I wouldn't call it like that. It's the service market of US. And I must say that we look at it as a huge opportunity for us to do North America, Latin America, the rest of the world in one platform.
Thank you. Could you quickly just elaborate on the financial expense post in the P&L?
You mean how we have financed the company from okay. The finance post is that when we were into we tried to buy a company a year ago, as you know, in England. And we, after some careful analysis, decided to pull out of. Well, in that process, we refinanced the possibility to do an acquisition like that. So we got a credit line of 1.5 billion that we can pull if we want to, and we negotiated that with a company in Sweden, and we have that one. So that credit line we have. Which is good. It was at a higher cost than we would have done normally, but that was the situation at the time. So we are living with that, and we have no issues with it.
Thank you. It's coming in a lot of questions here, and I think we're going to just do a few more. How is the partner program evolving?
It's evolving very well. If you think about it, if you are a best of breed manufacturer of software, and then suddenly your customer will say, we want you to help us with the invoicing or ordering or some other business messages. Either you then have to build that yourself, which is something you don't want to do because you're focusing on something totally different. So if you then have a vendor like Pagero then that can help you with this, especially if we can do it globally as we can, and at the same time we have a vendor like Pagero, which have I would say, a partner-friendly way of looking at situations because we know how it is. We both share it from a technical point of view. We have a technical agreement with these guys. We also have a financial and a marketing agreement with these guys. So we sort of a win-win situation for both. And we have seen that the launch of that program has made more and more of these ERP vendors or best of breed vendors, tax engine companies to connect to Pagero Online and use us and work with us. And that fuels our pipeline enormously at the moment.
Thank you. Will Pagero ever support B2C transactions?
We are supporting. We haven't made that much noise about it. In Latin America, we have hundreds of millions of B2C transactions. We are also using or building parts that are now coming into the Pagero Online platform, also that can sort of service the B2C market. The B2C market was not the core for us in the beginning, because the B2C market was sort of a low margin, high volume market. So we prefer to look at the more B2B related market. The problem is that a lot of B2B companies also have a lot of B2C to offer to service. They go direct to customers, and more is going that way. So we are adding that capabilities in the whole platform, and we are rolling that out in some countries, and we are at the moment in the phase of looking at some other countries to do that also. So that's the answer I can give now.
Thank you. Could you tell us a little bit more about Pagero's role in the collaboration with Thomson Reuters? How will income be divided, for example?
I don't want to go into the specific details of that program, but we are sort of treating all partners equally. So if you become a partner of Pagero, depending on what partner program you are choosing, you will get a kickback as long as that customer is a customer of the partner company. That's what I can say.
Thank you. Moving on to the last question here. Average personnel cost per employee shot up a little bit. Are there any particular drivers behind it?
I mean, we all know that we have been we've been sort of in resources that we have. Sorry, the resources we have are valuable resources in the market. So the cost of resources has gone up. That's one of the reasons. We have also increased people in certain parts of the organization where we see that we need more resources. We also balanced some of our R&D resources a different way, so it's been increasing a little bit. But it's under full control, and we think now that we have reached sort of a level where this is going to be a little bit lower cost development going further.
Thank you so much for the presentation and for answering our questions, Bengt, and best of luck going forward.
Thank you very much.